가치투자의 아버지, 증권분석의 창시자, 경제학자이며 작가인 그는 투자자라면 누구나 알고 있을만한 워렌버핏과 월터슐로스의 스승이기도 합니다. 증권분석과 현명한 투자자라는 명절을 남기며 투자자들에게 아주 큰 선물을 주었습니다. 그의 이름은 벤저민 그레이엄입니다. 데이비드 도드와 함께 자신의 첫 저서인 증권분석을 1934년에 출간했고, 지금까지 수많은 투자자들이 그가 남긴 저서를 읽고 공부했습니다. 안전마진의 개념을 제시하고 안전마진의 중요성을 강조한 벤저민 그레이엄. 그의 목소리가 담긴 몇 안 되는 영상일 겁니다. 1955년 컬럼비아 대학교 경영대학원 세미나에서 코트니 브라운 학장과 벤저민 그레이엄 교수의 세미나 영상 함께 시청해보도록 하겠습니다. 알파 컨덕터 채널 구독과 좋아요, 알림 설정하시면 최신 영상을 가장 빠르게 시청하실 수 있습니다.
First, let me give a caution. I hardly need give it to a group of informed students such as you. No one knows precisely why the market behaves as it behaves, either in retrospect or in prospect. The best we can do, as you all know, is express informed judgments. But it is important that those judgments be informed. We do know that there has been a substantial rise. That rise has been going on for a number of years, particularly since the middle of 1953. And we do know that the rate of that rise has been very rapid, uncomfortably like that of the 1928-29 period. It has resulted in a lot of comparisons being made in the press. Moreover, the present level of stock prices, as measured by the Dow Jones averages, is about equal to, indeed a little above, the peaks of 1929. A number of explanations have been advanced regarding the stock market rise that suggest it may reflect a return to inflationary conditions. This doesn't seem to me to be very convincing. First, because there is no evidence of inflation in the behavior of commodity prices, either at the wholesale or at the retail level. And there hasn't been over the past year and a half. Extraordinary stability in the behavior of both indexes. There is so much surplus capacity around in almost every direction that it's hard to conceive of a strong inflationary trend reasserting itself at this time. Still another explanation is that the stock market has gone up because there has been a return of that kind of speculative fever that has from time to time in the past gripped the country. The Florida land boom, the 1929 stock boom, they've occurred in history, as you know, all the way back from the tulip speculations in Holland. I suspect there's a certain element of truth in this one. However, it doesn't seem to me that it gives us too much concern, because there has been no feeding of this fever by the injection of credit. I think it is important for us to observe that the amount of loans, brokers' loans, loans made to brokers for the financing of securities of their customers that have been bought on margin, are less than $2 billion at present. In 1929, they were in excess of $8.5 billion. And there is now a larger volume of securities on the stock exchange. Gentlemen, Professor Graham will pick up the story at that point.
One of the comparisons that's interesting is one not between 1929, which is so long ago, but 1950, which is only a few years ago. It would be very proper to ask, why are prices twice as much as they are now when the earnings of companies, both in 54 and probably in 1955, are less than they were in 1950? Now, that is an extraordinary difference. And the explanation cannot be found in any mathematics, but it has to be found in investor psychology. You can have an extraordinary difference in the price level merely because not only speculators, but investors themselves are looking at the situation through rose-colored glasses rather than dark blue glasses. It may well be true that the underlying psychology of the American people has not changed so much. and that what the American people have been waiting for many years has been an excuse for going back to the speculative attitudes which used to characterize them from time to time. Now, if that is so, then the present situation can carry a very large degree of danger to people who are now becoming interested in common stocks for the first time. It would seem, if history counts for anything, that the stock market is much more likely than not to advance to a point where of real danger.
You've said that stock prices now are not too high, but that you fear they will go higher. Well, then are you recommending the decline?
Well,
May I defend you on that?
Yeah, go right ahead.
Those who have watched the security market's behavior over the years have become more and more impressed with the fact that stocks always go too high on the upside and tend to go too low on the downside. The swings, in other words, are always more dramatic and more, the amplitude of change is greater than might normally be justified by an analytical appraisal of the values that are represented there. I think what Professor Graham had to say was that his analysis of a series of underlying values would indicate that the stock prices are just about in line with where they might properly be. However, from experience, that would be the least likely thing to happen, that stocks would just stabilize right here. Now, if it's the least likely thing to happen, and you have to select a probability between going up further or down further, because of the strong momentum that they have had, I think I would be inclined to agree with him that the more probable direction would be towards somewhat higher levels. Yes, sir.
Formerly, when stockholders believed the market was too high, they switched from stocks to cash. Now many people feel that due to capital gains tax, they are not free to act. They are what you might say locked in. What effect does this have on the stock market in general?
Yes, there's no question about the fact that it does discourage some sales that might otherwise be made, because one selling stocks and trying to replace them would have to replace them at substantially lower prices to come out even after paying the capital gains tax. However, that's not the only reason people are reluctant to sell stocks and buy bonds. Stocks are still yielding about 4.5% on the basis of current dividend payments, whereas bonds of prime quality are closer to 3%. Here again, we find a contrast with the situation in 1929, when stocks were yielding about 3.5% and prime bonds closer to 5%.
In addition to raising margin requirements, should the federal government take other measures to check a speculative boom in the stock market, and which method is the better?
My own opinion would be that the Federal Reserve should first exhaust the possibilities of raising the margin requirements to 100%, and then consider very seriously before they imposed other sanctions.
If needed.
If needed.
What is the significance of the broadening public participation in stock purchasing and ownership?
There are probably two elements there that are important. One, the broadening participation of the public in stock purchases is one measure of the degree of speculative fever that we were talking about before. However, subject to that being controlled, and I believe that it can be controlled, as Professor Graham has indicated, but over and above that, there is a broad social significance to that, it seems to me. What it in essential terms means is that the ownership of American industry is being more widely dispersed among more and more people. This has very favorable repercussions in terms of our political and social life.
This question concerns the so-called Wall Street professional. Are Wall Street professionals usually more accurate in their near or long-term market trends, forecasts of stock market trends? If not, why not?
I said, you say that they are more often wrong than right on their forecasts?
What I mean is, are they more accurate in the shorter term than the long-term forecasts?
Well, we've been following that interesting question for a generation or more, and I must say frankly that our studies indicate that you have your choice between tossing coins and taking the consensus of expert opinion. And the results are just about the same in each case. Your question as to why they are not more dependable is a very good one and an interesting one. And my own explanation for that is this, that everybody in Wall Street is so smart, see, that their brilliance offsets each other. And that whatever they know is already reflected in the level of stock prices pretty much, and consequently what happens in the future represents what they don't know.
I want to raise a point of argument here on this question of inflation. It seems to me that you're correct in stating that there's been no inflation in '54, but there also appears to be several long-term inflationary points in the economy today. These, I think, are the deficit spending that's supposed to be continued by the government, the easy money policy, which is expected to continue, the question of increased union wages, the talk about increased minimum wage, and the talk about a guaranteed wage. All these, and on top of this, the road program of $101 billion, which the government has just announced. These seem to me to be long-term inflationary things in the U.S. economy, and I wish you'd talk about these.
That's a question that has a good many angles on it. Perhaps we both better try it. Professor Graham, why don't you take the first crack?
Well, I think there are two answers to that in my mind. The first is that acknowledging that there are inflationary elements in governmental policy as it's now being carried out, it may be argued that those are just necessary to keep things on an even keel, because without them, we might have some inbuilt deflationary factors in the way business operates through increased productivity, capacity, and so forth.
I've been impressed with the possibility of labor costs as an inflationary factor. But a rise in wages does not necessarily mean a rise in labor costs. It depends upon the relationship of the rate of change in wages and the rate of change in output per man hour or productivity. Now, if wages are related to productivity, as you know they were in the General Motors contract, there is no necessary inflationary consequence to be anticipated. However, apart from that, it's entirely possible that if wages go ahead faster than changes in productivity, there could be a seriously inflationary factor.
On the basis of your recent answer with regard to the psychological impact of the present condition of the market on the small investor, do you discount the entire theory of dollar averaging?
I think there's no doubt, that accepting your premise, the man will put the same amount of money in the market year after year for the next 20 years, let's say. There is a very great chance of coming out ahead regardless of when he begins, and particularly regardless if he should begin now. You have to allow for the human nature factor, that no man can really say definitely just how he's going to behave over the next 10 or 20 years. And there is danger that people who start with the idea of being systematic investors over the next 10 or 20 years may change their attitude as the market fluctuates. In the first instance, put more money into the market because they become speculators, and secondly, get disgusted and scared and don't buy at all later on when prices get low. It's a psychological danger. The fault is not in the stars or in the system, but in ourselves, I think.
1950년대에도 이미 벤저민 그레이엄은 투자할 때 인간의 본성을 고려해야 된다고 말합니다. 사람들이 향후 10년에서 20년간 체계적인 투자자가 되겠다는 생각으로 시작했다가 시장 변동에 따라 태도를 바꿀 위험성에 대해 인지하고 있다는 것이 흥미롭습니다. 그 시대에도 지금처럼 인플레이션의 증거들을 찾으려 노력하고 매크로 관점에서 시장을 바라보고 월스트리트과 전문가들에 대한 단기 예측과 장기 예측의 정확성을 묻는 질문들이 흥미롭게 느껴졌습니다. 투자에는 역시 정해진 답이 없고 수많은 대가들의 전략을 벤치마크하고 나만의 이기는 전략을 만들고 또 그것을 측정하고 수정 보완해야 성공할 수 있다는 것을 다시 한번 느끼게 되는 영상이었습니다. 그리고 구독자 여러분들, 벤저민 그레이엄의 현명한 투자자와 증권 분석 반드시 읽어보시길 추천드립니다. 다음 시간에 더 좋은 영상으로 찾아뵙겠습니다. 금융시장 초과 수익 지휘자 알파 컨덕터였습니다.